What is going on, everybody? Welcome to another episode of the Rapid Review, episode 60. Crazy. Done the 60 weeks. Appreciate all the support. Appreciate everybody out there. Happy Father's Day to all the dad traders out there. Appreciate you guys spending a little Sunday night with me. Apologies for this coming out later in the weekend. Had a lot of stuff going on, work and things. So, yeah, without further ado, as you guys know, we'll do everything we always do, break down the overall market, industry groups, stocks, and answer any questions that you guys have to get everybody ready for tomorrow's opening bell. So without further ado, it's time for the rapid review. All right, you guys know the deal. Disclaimer: educational, informational purposes only, not financial, investment, or trading advice. Chat is open. I see you guys all in there chatting it up. But you got questions, you got your own comments, stocks you want to look at. I got a ton from a couple people on Reddit, a couple people from Discord, and elsewhere that we'll bring up. But if you guys have some other stuff, Carl, I see you want to look at MU and SanDisk, which we'll absolutely do because I'm holding both those names right now. And anything else, we'll take a look at it. And I probably should say this more in the beginning. If you guys do enjoy this, if you guys, especially if you're watching every week, subscribe, like, comment, all that kind of stuff, just because it helps to push this out to more people, help the chat grow, more people in the chat, more conversation going, making this more fun. But let's get started. Market direction. I still have my market stance as sideways. Exposure levels at 60 to 80%. I will say I am higher than that. I'm a little over 80%. And I'll discuss a little bit about why that is. Webby trend, we're looking at choppy. And if you want to know what the Webby trend is, check out his YouTube channel. Look at his 3-day trend. And that'll kind of break that all down. My 50-day trend, which is more of a macro look at the market, we're still in an uptrend. And you can see we're just sitting off all-time highs with the S&P just 1.58% off all-time highs. The NASDAQ 2.47% off all-time highs. 56 days into the rally from the bottom of the follow-through day. The follow-through day being on the 8th on the S&P, and the official by the rule follow today on April 14th on the NASDAQ, though I think a lot of us looked at the 8th for both indexes as just follow-through day action, and that triggered a lot of buying for everybody. All right, index performance. So looking at this week, the S&P was up 0.93%, NASDAQ up 2.43%, Dow up 0.71%, Russell up 1.22%. So NASDAQ leading out the week. If we're looking at the closing ranges, you can see the Russell and the NASDAQ closed in the upper range, which is positive. That's why you see that all in the green. You can see the S&P right in that middle at the 55.9%, which is giving us that kind of middle range, showing us as the white, and the red Dow 21.8%, so in the bottom range. And then for the year, we got the S&P up 8.23%, NASDAQ up 12.40%, Dow up 5.86%, Russell up 17.58%. So yeah, I like looking at all this stuff. Number one, the goal is to beat the market, ideally beat all these indexes. So hopefully you are beating all these indexes, and then you know your time is worth it. And again, like the closing range being big, good seeing the NASDAQ leading out, good seeing the closing range for the weekly, pretty good. But we'll talk a little bit more about it when we start getting into the actual index charts. Moving averages, big changes this week. The S&P retook the 10-day simple moving average, which is why it's underlined there. NASDAQ retook the 10 and the 21 EMA, which you can see that underlined there. And then everything else was green last week. So basically this week brought us back to green across the board. So very, very positive to see that there. Distribution days. All right, so on the screen you guys can see exactly where we're sitting in terms of distribution days. What happened this week? Adding S&P, you can see we added the June 17th. That Wednesday was added distribution day. Also was a distribution day on the NASDAQ, and then the NASDAQ also had the Tuesday 6/16. So we added 2 days on the NASDAQ, 1 day on the S&P. You can see that up here. We didn't lose any days, so net gain of 2, net gain of 1 over here, and nothing expired. Now, looking into next week, we are going to lose the 518 on the NASDAQ and the 515 on the S&P. That's going to be due to time. So you can see that right here, 23-day trading days. We'll see once we hit that 25 that these expire. So very, very close to there. In terms of price action, good possibility if we get some really, really strong movements, we could see these two 6.5 and 6.5, 6.5 and 6.9 days fall off. But other than that, not likely to see a ton of distribution fall off. That being said, if we don't gain any distribution and we finish out, let's just say next week 4 and 6, still a little bit on the higher side on the Nasdaq, which is somewhat of a concern. But again, for me, and I've said this many, many times, price action is key. This is something that I look at, and it helps me to bring context to what's going on in the market. And it does raise a little bit of red flags when we start seeing some high levels of distribution. But it's not an end all be all for me where I decide not to get into the market. So just wanted to make that caveat. Here's a distribution day calendar. Again, you can see the Nasdaq starting to cluster up towards the bottom. So just more distribution days starting to add in. It's just basically a visual of distribution days. This is automatically done. I don't turn these on and off. So sometimes this will be a little bit different. And then you can see we had Friday, market was closed. So, all right, let's now jump over and let's take a look at what's going on in the indexes. What is going on, Chad? Glad this works for you, Carl. Works for me too. All right, so looking at the Nasdaq, we're looking at the daily. As you guys know, I like to kind of do a quick little breakdown what went on the week, and the main thing I'm looking at here is looking at those key price levels to the upside, key price levels downside, and just understanding what is kind of expected and normal price action, and then which way it could be breaking to the other side, upside, downside, that would cause us to maybe see some sort of change that makes us change how we approach the market. So where we're sitting at right now, just a kind of macro overview, right? We had the Father Day. We had such an exceptional, beautiful, profitable run from April really all the way up till about May 14th. Things were just super, super easy, very easy to make money in this market. Pulled back, things got a little choppier, but we still saw some pretty good things till about June. So really April, May, very, very easy, good money markets. As you can see, clean uptrend, barely ever testing below the 10-day and never even touching the 21. And then we knew eventually we were going to test the 21, but we had not only tested 21, but we actually came down and tested the 50-day simple moving average. So really, really rapid correction. But sometimes we see that when we see such an explosive move to the upside, normally the snap back down is a lot more violent. So and that's exactly what we saw. But we saw clear support at the 50-day simple moving average, which was very positive. So even though we broke the 10 and broke the 20, seeing the support at the 50 for the macro trend was very, very positive. But we saw volatility increase, and because of the big breakdown to the downside, we expected very likely to see some more choppy action as we move sideways. Very similar to how you would with a stock. Big break to the downside. You don't really expect a really, really clean, rapid recovery and continuation of the trend. You normally get some kind of choppy action, and that's somewhat what we've seen. Again, multiple areas of support at the 50. We rebounded, came right up towards these May 14th highs, saw some clear resistance, pulled back, found support at the 21, found support at the declining 10, bounced, and now we're just kind of sitting right below those 514 highs and those all-time highs, which are up here. We did see a cross of the 10 below the 21 EMA, which isn't a great sign, but nothing that's too alarming. And I think the real big positive that we saw this week is Monday we had the big gap up, and the real thing was we saw the resistance to the upside, but then we also saw the support to the downside. So we did see some of the volatility start to decrease, right? We didn't see as rapid and big sloppy moves as we did on the downside. And we're kind of just pulling back right below those all-time high areas with a little bit tighter of an action, coiling up. Now, the big question is, which way do we break? Do we coil up and break higher? Do we coil up and just eventually roll over? Is the upside resistance kind of the stronger point, or is the downside support the stronger point? And as we're starting to move sideways, it's really that fight between the bulls and the bears and seeing who runs out of buying power first, right? If we have the bears that kind of run out and there's no more selling coming into the market, then when the bulls take over, we normally see a pop higher. Or in the inverse, if we see that the buying power just completely dries up and all that's left is selling power, we break to the downside. So that's just kind of an overall of how I look at the market. I do try to kind of give you guys a little context of why I do what I do, why I say what I say. That's the gist of it. So really where we're at right now, like I said, very, very positive. See the gap up, kind of sideways action, pulling back, finding support, and just sitting in this little area. With right now, I think the key levels to the upside really being that Tuesday high, which is kind of corresponding very closely with the May 14th high, the all-time highs, those two key levels. I would like to see us, now that we've kind of coiled up, see some, a nice big aggressive move to the upside. To the downside, ideally holding the 10 and the 21 like we are right now, but I think the most important level right now is really that 50 simple moving average that we've clearly found support at, being the most close level to stay. So if we kind of stay in this tight range here, see volatility decrease, move sideways, I think that's constructive. Not ideal, right? We all want to see the market just continue higher, make money, and see our stocks move. But if we do move sideways, I think that's very constructive. Doesn't necessarily mean that we're going to the upside, but it is something that just lets me know that, hey, the market's just going sideways, doing its thing, digesting this massive move that we've had, and hopefully breaks the up. If we do pull into the 50, nothing, I don't think entirely wrong with that. Not ideal, not super strong, but nothing that's like super alarming. But a break of that 50 is really what's going to make things kind of concerning to me, because we found support there. And then if we break through on the downside, that's kind of that first alarm. And then if we break these prior lows of June 9th, that's an even further alarm. And very likely I'd probably find myself on really, really light exposure if that does happen. So yeah, I think really the key levels, look at that May 14th and look at that 50-day moving average. Anything that's kind of chopping around in between is just kind of sit, wait, and see in terms of my perspective. We'll take a look at the weekly. Again, super, super ridiculously strong move. The pullback, shake out below the 10-week, and then back up. I will say this big volume spike was an options expiration. And obviously we don't have any Friday price action because the market was closed. With the uptrend, the 10-day moving average is now being used. With this uptrend, the 10-day moving average is now being used. Yeah, I always have the 10-day moving average on my chart, right? And it's very simple for me. You have your shortest term. You're kind of, this 21 EMA is really the big one for me, especially for those power trends, that easy market environment where we're just trending above it. And then the 50 being the macro. The 200, it's on there, but like, to me, I'm normally out of the market before we're breaking below the 200, normally, depending on the action is. So they all have their place. They all have their way to interact with the market. But the 10 has been, because of how strong this is, we have really respected that 10-day simple moving average 100%. And that's one of those things. The moving average in and of itself, it doesn't really mean anything unless we support it. So like the 50 really comes into play right now and being a real important moving average because of us finding support out there. That's kind of where I look at it. It's not that if we break it or if we find support at it automatically means good to the upside. It's just we look and see, is the market respecting these levels? And if it is, then that comes into a little more heavier weighted in terms of how we view those price action, interaction at that price action. The S&P, very similar action. Dow, a little higher up on the uptrend. Russell looking good, kind of holding up. And this is something that's pretty positive. Seeing these small caps really not coming as deep to the 50, seeing these kind of shakeouts below the 21 EMA and that rebound holding above all those, being pretty resilient has been another real positive action. So overall, again, I think to summarize what we're looking at with these charts is, the market had this rapid advance. It kind of pulled back, which was something we knew was going to happen eventually. It found support at the 50. It's resisting at the upside. And now we're just kind of seeing, like, which way do we break? How long do we chop sideways? And which way do we break from here? All right. Number one job is cutting losses, bailing when stocks break the 50. So it's a guardrail, 100%. 100%. And these are really good trailing stops as well, which is what a lot of us use it for. All right, let's jump back over to the slides. Let's look at the news events going on next week. We have GDP reporting on Thursday. We did have the Fed meeting on Wednesday, which we saw a pretty poor reaction, but then kind of quickly rebounded there. And like I said, that triple witching, which caused that high volume, which really wasn't Friday, it was really Thursday. Earnings, the big thing, I already saw it brought up in the chat, right? MU, I do own that name. That's kind of the big name that we're all looking at, seeing how that kind of interacts. And then you can see some of these other names. All these kind of names that are being shown here is just within the parameters 15 dollars, an average daily average volume of 100,000 shares, and a market cap of 500 million. So casting a pretty wide net. So you can see earnings pretty light. Again, MU being the big name to talk about. All right, let's now take a look at the sectors. So looking at my kind of sector dashboard, technology is still the clear leader, right? Still definitely in the #1 spot. If we look at what went on this week, technology continued to lead, which was very, very positive. And then you saw industrials, utility in the kind of second place, though utilities very low on the rankings. Industrials definitely in the #2. And then some other stuff going on here. But when we really look at the rankings, I think for sectors, it's a little bit better to just look at what is going on with the charts. So let's do that. We'll jump over to Deepvue. For those of you who don't know, I am a Deepvue partner. This is the tool I use for all of my stock analysis, fundamental analysis, screening, watch list, everything. And if you are interested in checking that out, link in the description. There is a free month code and then 12% off an annual. So I am an affiliate. But yeah, use that stuff to check it out. And if you have questions, always reach out to me, because I do think this is by far the best tool out there at arguably the best price as well. All right, sector tracker. All right, so technology, like we said, leading the week. Really, really similar to the market. Big, strong move up. Rapid decline. Pulled back, tight. Very, very similar action. This I got to just sync up. Let me get my charts. See, this is my problem. I didn't sync this up. Symbol sync. All right, you know what? I'm not sure. We're just going to do this. So I don't know what I did to my charts when I was messing around with some stuff. But all right, so here we go. Industrials, all-time highs. Really, really like this action. Real nice, kind of how it pulled back, found support at the 200, bounced back up, moved sideways, started supporting the 50, traded really tight. Now it's kind of broke the up high side. Industrials looking really, really strong. Financials trying to make its way back. Nothing really to write home about. Nothing that screams to me this is where I really want to be paying attention to, though there are some names that are looking good. Utilities. Utilities seeing resistance at the 50, kind of sideways, and we're going to see this a lot with these sectors, a lot of sideways. Nothing that's screaming to me that I need to kind of pay attention to. Materials looking really, really strong. We've had this really rapid pullback. We've started to see almost like a VCP type of pattern starting to form. We're sitting right below those all-time highs. We've kind of pulled back right over here, and we're looking like we kind of had this rapid run up, this sideways action, starting to see volatility contract and possibly get ready for maybe a breakout to the all-time highs and make a move. So materials is definitely something I'm paying attention to. Consumer discretionary, very much sideways action, but do see some volatility contraction in this, the way we see things kind of tighten up. But nothing really to write home about. Consumer staples, definitely nothing that I'm really paying attention to. And communications rolling over, breaking below those converging moving averages, not positive. Real estate looking strong overall. Healthcare. So healthcare showed a lot of strength and then kind of rapidly pulled back. Again, nothing that screams leading sector to me. The big thing, though, energy. Energy has been what kind of led out the beginning of the year, and even towards the end of last year was where the kind of leading started. And then we've kind of seen a lot of this sideways action. But unlike some of these other groups, this has kind of rolled over and started gapping down, making lower lows. So energy really falling out of play. The one thing I will say is keep in mind there are some energy plays that fall a little bit more into the AI movement, not necessarily your traditional energy, which is the majority of what we're looking at in XLE, so your oil, gas, things like that. Keep that in mind. Doesn't necessarily mean if you have a really good energy AI play that looks beautiful because of how energy the sector is acting and how oil and gas and all these other things are acting, I'm disregarding that. So keep that in the back of your mind. Utilities may be tied to the Iran war. Energy-related commodities have been all over the place. Yeah, definitely a lot of market volatility with the news for sure. So at the end of it, really, the clear leader right here is technology. I think that you have some definitely interest in materials and obviously industrials, #2 for sure. A lot of these being tied into the whole AI kind of play, right? The materials, the industrials, building out of AI, the materials, the copper, the things that are needed for AI, really starting to play into that technology sector, all kind of grouped around that whole theme. So bullish in biotech, holding XBI, Hinge, not necessarily bio. Lilly, more healthcare. I think AI will advance this field tremendously, especially Lilly. Yep. And when we jump over to my stocks, we'll kind of look at Lilly specifically because it is a name that I do own and bought on Friday, and we'll talk about where I bought that. All right, let's go to the wrong button. Let's look at my industry groups. Just give that a second to load. For those who don't know, I kind of built these groups out myself, curated all the stocks. So if we're looking at the kind of ranking right now, you guys can kind of screenshot that to see what's in the. Let's see if I can get this to wrong way. Can I get you guys all top 20 in one? So you guys can screenshot that. There you go. Okay, so you can screenshot that. So you can see the top 20 groups, give you a general idea of what's going on in the market. And I definitely, just from my screening and kind of bottom-up analysis, I can agree with this, right? Memory, the MUs, the SanDisks really being the leaders, AI data center networking, semiconductor equipment, semi stuff in general has been super strong. The AI cloud, neo infrastructure definitely starting to show strength. Optics, crypto mining, satellites, passive connector components, AI stuff, energy storage, electronic contracting manufacturers, semiconductors, specialty metal alloys, space, LiDAR, copper. I think a lot of us would say that majority of the stocks that we're looking at fall into these kind of categories. But what I like to do is like to look at what went on for the week. So leaders for the week: AI, neo infrastructure, semiconductor memories. You guys can kind of see all those up on the screen. Nothing different. Maybe the nuclear having some strength, something to pay attention to, possibly. The bottom losers: space economy. It's still definitely something to be paying attention to. Rough week, but definitely something to pay attention to. Satellites, still something to pay attention to. We see oil and gas getting hit. Something to probably stay away from. That's kind of it there. And then rapid movers. This is just showing some of the big jumps through the rankings. We are kind of seeing a lot of stuff within the healthcare starting to move up the rankings. I think we're seeing some of the industrial stuff really moving through the rankings, which again, like HVAC, thermal, data cooling, AI, a lot of AI related, AI build out stuff within the industrial area. But other than that, nothing screaming at me right now that requires a ton of paying attention to. Real estate has been showing some strength, so home builders, things like that. And then to the downside, things falling. Let's see. Don't like seeing cybersecurity make that big drop. We'll talk about Crowd. We'll talk about Datadog and some of those names too, though, because I'm sure a lot of you guys have questions on that. Solar making a kind of drop. Don't like seeing that. That's it. Nothing else. So don't see anything else. Nice rankings. Goes more in depth than IBD and MS. Yeah, look, Andrew, that was kind of my play. I kind of took it into my own hands. I felt like majority of softwares are looking at things a little too broad. Looking at things in more of a past way where you have like IBD would have like 10 different oil and gas companies, and they're all so highly correlated, and then like one or two semiconductors. But as we've seen in this market, like memory specifically within the semiconductors has stood out far more than some of these other areas. So I kind of put a modern twist and combined up some of the legacy groups that tend to correlate very, very closely together. I tried to split out some of the new age stuff to stuff that was highly correlated or within the same groups. So I could really see a little more specialized, like, okay, semis are showing strength. We all see that, right? We all look at the semiconductor ETFs and they're booming. But specifically, what should I be paying attention to? And then everything's kind of weighted in here. And my goal is not only to just look at the current rank, but like we just looked at, see what led the week, see where the rapid movers, see what's moving through the rankings. And then what I do personally, and I wish I could share this, but it's just something that's kind of locally hosted. And I don't really want to put something out like this. It's just to run it for other uses would be a real headache for me. But you could do this stuff on your own with AI if you just take some time. It does take a lot of time, especially the sorting of stuff to what you feel is comfortable. Like to get these 171 groups took me a while. It took me a lot of trial and error. And every now and then I'm still tweaking some stuff. But like I have, right, here's my semiconductor equipment. All these top, which are my main ones, are what are causing the group to be there. And then I'll have like secondary exposure, which has no play into the rankings. But just if this group's doing well, I want to be paying attention to these names as well. So a little breakdown onto what led me to do something like this. So yeah, so I like to share it with you guys so you guys can see it at least and see where I'm kind of getting my ideas from. All right, let's jump over to Deepvue. Take a sip of water. Again, really appreciate you guys joining us Sunday night on Father's Day. All right, so we're going to start off. We'll go through my portfolio. Because I think that covers a couple names that people have mentioned. Then over here, we have a streamer asked. So Twin Danny over in Discord, a couple names he asked. I was privately asked by someone about these two names that they own. So I'll go over that. They didn't say whether or not I could mention their name. So I just putting an initial there. So I know who it is. These are a couple of things that were brought up on Reddit that rather than respond to the comments, I said I was going to put in this. And then another Discord, Finding Hope, brought this up. So we'll go through all those names and then anything else that you guys put in there. So, all right. Everybody knows SanDisk, name that I've owned for a while. If you've been watching for a while, you know kind of were my initial buy. This was the first thing that got me in on the follow through day. I've taken profits. I've added back to it. I'm kind of holding a core position right now. We're just kind of riding that. We're just really riding that 5-day simple moving average. We're starting to get a little bit extended again. But I'm just kind of holding my core position, and we get a close below the 21 EMA is when I'll be out. That's basically where I'm at now, unless I kind of get a chance to add on. MU though, so really to SanDisk, if you own it, great. Just know what your plan is. Know where you're taking profits. Know where you're closing the full position out. Have those levels, have those stops, have those alerts, and just things don't always go up. And knowing, because if your plan was to hold the 21 EMA and you weren't really strong on that plan, a day like days like this could really scare you, or a day like here we're down 11% could really scare some people out. And if your original plan was to hold to 21 EMA, just understand what that looks like, right? Understand what that pullback really could be. So if we're going from these highs to around here, like that's a 20% pullback just to the 21 EMA. Are you comfortable with that? Are you comfortable not only with the stock, but what it looks like with your portfolio, depending on the weighting of your position? So think about all those things. Everybody's going to be slightly different. Everybody's appetite for risk is going to be a little bit different, but just have that plan. MU. All right. So the big one here, right? We're reporting on tomorrow's the 2nd, Tuesday's the 3rd, and then Wednesday's the 4th. Okay. Reporting Wednesday. This, I am starting to get a little heavier weighting in because I did add off the 21 EMA. So expecting this to kind of calm down going to earnings, but anything could happen. We had a strong finish on Friday. Because I'm heavier weighted in this, knowing that earnings, I have a good cushion though. I might trim a little bit, just to lighten up, just in case we do get a gap down on the earnings. And knowing that kind of gambling of earnings reactions, because it can break up, it can break down, doesn't necessarily have to do with just the reporting. They could beat estimates and still drop down. So it's just more of, being comfortable with the possibility of the jump to the downside just as much as you are to the upside. But right now, this chart looks beautiful. It's trending nicely. It's doing well. And again, something like this, right? Just to the 21, 15.9. You can see we're 19.92% off the 21 EMA. So just keep that in mind. Have a plan. Again, my plan is I'll probably trim going into earnings just to lighten things up so my exposure levels aren't too heavy, but still give me exposure. So if we do get a good reaction, we'll bounce. While we're here, BE, a lot of people talking about this name. I bought this kind of down here on the 11th, I believe. Yep, I think I bought it here on the 11th. We broke the 50, reclaimed the 50. I put a small position on, and then I bought again, I believe, on the 15th as we reclaimed the 10 to 21. Built a pretty good position, and now we broke out to all-time highs. So kind of my approach in this type of market, I'm a little more heavy on the breakout buying when we're earlier in the uptrend. And a little, especially on some of our higher ATR names, I like to buy a little bit on the pullback or near areas of support for tighter stops or breaking near, like, breaking out through key levels, but deeper in the pattern. The big thing that still lets me do that is this is a clear leading name. This is one of those names that a lot of us are watching because it's been leading the market. It's got great fundamentals. Not buying something in an overall downtrend, trying to catch a bottom. Buying something in overall uptrend that's consolidating, and tied to an area of resistance or support. Do you ever entertain cover calls? I don't touch options. I don't know options. It's just not my repertoire. I've never studied it. I'm sure there are ways to do it. I just never found a need for it. And you don't need to do everything. So I don't mess around with options. There are people that do. If it works for them, works for them. Not something I've needed to do. Maybe in the future I will. Maybe I have to go down that rabbit hole. But right now I just don't see a real need for it. I'm just kind of focusing on what works for me. And if that means selling into some strength and watching a name go on without me, that's fine. There'll be other names to buy. Just because someone maybe doesn't own the MU doesn't mean they're having a bad year. So just because they don't understand this doesn't mean they're having a bad year. Just keep that in mind. Crowd. Okay, so now we're getting into some of the names. These are 3 names that have cushion in. These 3 names I don't have cushion in. And when I talked about my exposure levels being a little bit higher, it's because these names I have cushion, these names I have tight stops. So my overall risk into the market isn't horrible, even though I'm on the higher side. I have a friend, I have a friend who regularly gets killed on covered calls. Yeah, I'm not even going to sit here and talk about what you guys covered calls just because I have no business. I don't understand it. I don't know much about it. So, but if you guys want to talk about it in chat, that's all. That's you guys know more than me. So, do you think? All right. So crowd. This is a name that I've kind of bought really in the support area. It's really supporting the 21 EMA. Basically flat around on this name, and I am riding that 21 EMA. These names have showed a lot of strength, and this is what I talk about where I want to see strength in an uptrend, and I'm not looking to buy down in here where this name is really not doing anything, but now that's shown a big strong 81% move, I'm willing to kind of come in here because this is showing a lot of relative strength and buy at the support levels. Likely seeing that this is going to go sideways base, give me a really tight entry and rebound. So that's where it's got me in here. But just looking at some of the other names, right? We got Datadog, another big kind of play here. This one shook out below the 20 EMA, but really tight. You got Snow is another name. Same thing, was really tight. Looks like it shook out below the 21 EMA, rebounded right into that range level. Like seeing that. So I like seeing these names acting very similar, acting very strong. A lot of them hovering right below those all-time highs, looking very constructive, along with having good fundamentals. Like CrowdStrike, right? We see very accelerating earnings, accelerating sales. Earnings in the annual, not so great. Sales, okay on the annual. Growth in the institutional sponsorship. So that's what led me to this. I thought this chart looked the strongest. I thought it was behaving the best. And that's what led me to do this and gave me a good entry. Rocket Lab, right? SpaceX, everything that went on there. Needless to say, Rocket Lab, if you're like, well, SpaceX is the leader. SpaceX and Rocket Lab are probably the 2 leaders. SpaceX being the big name, Rocket Lab being the smaller name, entertaining different type of client. You could do a little research for that yourself, but I think, look, the fundamentals of this company look great. I think they both will benefit from the space and satellite stuff. But this is a chart that's tradable. SpaceX is not a chart that's tradable for me. As you can probably guess, look, we broke out here. I was buying in here, and I just didn't have any cushion for earnings, and it just took off without me. But then it kind of flipped the support resistance on these all-time high levels. and or prior all-time high levels, and we were finding support at 50. We shook out below it, came, rebounded, trading pretty tight. So kind of really looking at this Friday low as kind of like my drop dead stop on something like this, but probably trim a little lower just to reduce the risk. Higher volatile name, 9.5, but that's where I'm at here. And then Eli Lilly, very similar, big base pattern, broke out, squatted back just into the base, but held above the 21 EMA, and I bought right off that 21 EMA on some kind of weakness. But overall, this is, I think, name being one of the leaders within the healthcare space and pharmaceutical space for sure. So that's what kind of led me to take a position there. Small position, very small position, but still, needless to say, I took a position on that. With that being said, but just the biotech, because I know biotech stuff has been a big talk, and this is why, right? Big uptrend, sideways movement, break, sideways break, supporting off those 10 and 21 now. Not really. I mean, we shook out below, but breaking out those all-time highs, biotech showing strength. And again, personally, this being to me one of the leaders within that space. Re-entry trajectory, exactly. Even here, re-enter. So that covers where I'm at portfolio-wise. Almost fully exposed. So, yeah, that's where I'm at. All right, you guys, feel free to drop more names in here. I'm going to start going through some of the stuff that was given to me prior. Biotech's higher TR in general, are they not? Feast or famine? Not necessarily. Like Eli Lilly's not a high ATR. Eli Lilly's only 3.36%. I think the volatility comes from the fact that, especially in some of the younger biotech names, some of the names that are reacting off of maybe a single drug or a single biotech kind of play, tend to react based on approvals and things like that and cause a lot of volatility. So that's where I think a lot of the volatility comes in with these names. But when you got some of these bigger caps, I mean, this acts like any other stock for the most part, and it is lower ATR than a lot of these other names that I have. We flipped through them, right? 9, 5, 9, a lot of nines, 3. So yeah. So not always feast or famine. Not always feast or famine. All right, let's go over here. Where do we want to start? All right, let's start with Twin Danny. We already went over MU, so we got that one out of the way. We just went over Eli Lilly. We got that out of the way. Marvel. So let's look at the weekly. From a fundamental standpoint, this name overall, pretty good, right? We got decent sales, decent earnings, both on the quarterly and on the annual. We got some increasing institutional sponsorship. We're in the semiconductor group, so things are looking pretty good. ROE not too great. Higher ATR name, but yeah, overall fundamental is something I'm willing to pay attention to, especially when you're in a semiconductor kind of area in this market. But look at this explosive move coming off these lows right here. I'll even go off these lows right here to even where we're at now. 260% move in 18 bars, 18 weeks. So clear leader within this market. And you're looking at it from the March area to now. Is that 18 weeks? Yeah, that makes sense. Okay. Now when we come into on the daily, oops, didn't want to move that, but now I did. We come to this on the daily, right? Again, we see that explosive move up, and now we're kind of in that sideways action. And this is kind of where you start to get that high, tight-ish flag action. I wouldn't necessarily call this high tight flag because we did have a pretty deep 24.88% correction. Things started to get a little more sloppy. They rode up, but then they kind of got sloppy. Really for me is just kind of looking at a really strong move, and now we're getting a basing pattern. We've rode the 10-day simple moving average. We're seeing there was some resistance at the all-time highs. We're kind of moving sideways. How about that? We're back. Are we back? I think we're back. My bad. I lost you guys for a second. Are we rolling? We're rolling. All right, we're good. Sorry about that. Internet went out. quick second. We're back. Okay, so like I said, so resistance at those all-time highs on Marvell. We've kind of pulled back in. I want to see this digest a little bit more, personally. I guess I could see somebody wanting to just do a traditional buy at the all-time high breakouts, but for me, I want to see this digest a little bit more. It's definitely a leader, but that's just kind of my opinion on this. All right, good. We're back. We're back. Sorry. Sorry. Oh, quick Deepvue question. All right. I tried having the columns for annual RE, pre-tax margins, while the lists I was shown to like 2019, like your EPS column, it showed a number to 2023. How do you watch? I'm not sure. I'm not sure I entirely understand what your question is, possibly because I've never messed with the annual. I just have the last quarter. With all the list was shown like 2019, like your EPS column. It only showed a number for 2023. How do you watch? It could have been the name that you were looking at. Maybe it was a younger name that only reported back 2023. Shoot me a message and send me some screenshots, and I'll try to help you out. Try to figure some things out. You could also just email hello, HELLO, at deepvue.com and talk to them as well. And you could also come down in here with this help messages, and you could screen record, and somebody will get you an answer too. So a couple different ways to go about that. But yeah, this is probably the most efficient way. But also feel free to message me if I could try to help you out. Taiwan Semiconductor, I did own this. I sold some of this, took some profits, just as it was kind of the laggard of my portfolio. But this is normally an easier hold kind of name, as just kind of has been trending higher with the market. Bigger player within there, very very big leader within semiconductor world. So extended though. So if you're in it, great. Marvel, if you're in it, great. Eli Lilly, I think still actionable. MU, if you're in it, great. Just understand earnings. So that kind of summarizes those three names. Just want to see if I got the answer to those questions. Where are we? Make sure I answered exactly what you were asking. I was mostly curious about how you do it, but you answered it quarterly. Okay, thank you. Cool. All right. All right. So hopefully I answered it exactly what you're looking at, to a Danny. Somebody privately asked me saying they bought these names. Let's see. Chart looks good. Chart looks good. Chart looks good. All right. First, DLL, 2x long on Dell. My question to you is, if you're watching, high ATR, leveraged name. Why do you need to trade that? Why do you need to trade that with leverage, right? In and of itself, we got a high ATR name in 9.38%. Why add all the extra risk? Why add all the more headache of these 43% pullback to the 21 EMA, which is extremely, extremely difficult to hold on to, when you could just do something like this, which is going to be half as volatile? You know, I think sometimes people are trying to hit home runs, and people are trying to get a little too crazy with the leverage. And yeah, to the upside, it's beautiful, but to the downside, it's tough. And then the reality of trying to hold the name for a big move when you have normal market corrections being to 20%, and with the double leverage, you need to be able to watch your position correct 50%. I just think it's not a psychological nor a risk management logical thing to do when you could just trade Dell, which has got a high ATR as it is. Oops. So, but in and of itself, I think Dell, the name itself, very, very strong, clearly a leader, moving sideways. Name I am watching, as you can see up here. Just my take on why trade the double leveraged. Unless you're really short-term trading it with some real tight stops and look for a big, big pop, different story. But if you're position trading it, or if you're longer-term swing trading, looking for a longer move and trail on the stop, I don't see the reason why. And this person, we've talked about this before, because you've done this a couple other times. You've sent me that you've bought higher leverage names And I've said why trade 2x, 3x long ETF for a name when the name itself has high ATR as it is. If you think you can manage the risk properly, that's fine, but I think most people aren't going to. And I think you're trying to hit a home run when you could basically, you're trying to hit almost a grand slam. You could probably hit a home run with Dell in and of itself. Does your criteria include RSI? No, I do not include RSI. Cowboy shit. Yeah, and that's the big thing. Like it's cowboy style trading, right? And you want to be in this for the long game. You want to be consistent. You're not taking these cowboy gamble styles. You're trading a little bit more controlled. All right. MBIL again, going into that 2x leverage. Why trade MBIL with a 23% when you have 11% ATR? Right? Why add all that extra? Why add all that extra risk? There's no reason. It's a lot harder to hold for the bigger move if you're holding those leverage names. Again, if you're telling me I'm holding this leverage name and I took a super tight stop right off or like down a low over here where I had like a 1% risk, but I'm holding a 2x leverage name and I'm maximizing, fine, get it. But if you're doing a traditional swing, longer term swing trade, position trading, just trade the actual stock. And then power integrations. I don't like the earnings on this name, though I'm not going to say that it's completely out of the question. I think a lot of us have seen this stock. There's just a lot of names out there. This is a market. There's a lot of opportunity. There's a lot of names that look good. There's a lot of similar patterns. And being somebody that looks at fundamentals, it's not really on my watch list because of that. Now, that being said, the chart looks good. You're in it now. Everything looks fine. I don't see anything wrong with it. Looks healthy. Don't know where you got in. Don't know exactly what day you bought. Actually, did you tell me this in the message? Let's go to your message. Entered Powell at 86.91. 86.91. Okay. All right. So I guess kind of breaking all-time highs, but not. So my question on this is, and this is like kind of like that in between, right? Buying a breakout. To me, especially with this clustering around these areas, like I'm drawing probably somewhere here. Oops, wrong drawing tool. I'm looking maybe somewhere around here. Maybe somewhere around here. Like very, very close to kind of where you're at. Maybe you bought. I probably would have been a little more patient on this name and wanted to at least see it take out that Wednesday, May 27th high if I'm buying it on a breakout, like traditional CANSLIM style breakout. Because right now we're hitting resistance, and I'm expecting this to maybe go a little tight sideways because we rebounded right off the bottoms. And if depending on how tight your stop is, like if this could very normal healthy action even pull right into here. Right into here. So I don't know how tight your stop is. I don't know how big your position is. But I think you have to be comfortable with this pulling into the 21, which maybe even as it rises up, it's just, let's even say it's somewhere right around here. So it's 78%. If your stops are super, super tight, you're very likely going higher probability to get stopped out of this name because very likely seeing the resistance that this moves sideways or has a tight pullback after rebounding off those bottoms. Getting stopped out, cut, and it hurts. But the name looks good. The name looks healthy. So I don't know your full. Did you put your stop loss? Oh, stop loss at low of day. All right, I could see it somewhat, but you might have to be willing to re-enter that, right? Because I think normal healthy action, this could easily pull back down. I don't think that low of the day is super, super significant to this, especially with this clustering right here. I think this low of day is like, it's just kind of just like throwing it in there. I don't think it's a super significant day. I think the 21 EMA is more significant. I think this prior low right here is more significant. And I think again, if you have that stop low of day here, just be comfortable getting stopped out and taking tight risk and being like, okay, it didn't work this time. I might have to re-enter. And if you can, and if that's good and the position sizing makes sense for you and the risk going to make sense for you, then that's fine. MBS has been one of my best performing in the last 6 weeks. Tremendous stock. 100%. MBS has been beautiful. Beautiful. Minus a shake apple of 21. Yeah. This pullback, very similar to SanDisk, right? We kind of all know as it got really, really super pushed out that the pullback was going to be rough. But this has moved beautifully. So, highly talked about name. 100%. All right, let's go to what we got going on in the chat, and then we'll go back into some of this stuff. On the chat, we got TLN, Talent Energy. Go to the weekly. All right, fundamentals, going positive on the earnings. Sales are accelerating, triple-digit sales. Love to see that. And as long as I see triple-digit sales, even if the earnings aren't something to write home about, seeing the accelerated triple-digit sales paying attention to that's big for me. So, and a younger company. Big growth in institutional sponsorship. Independent power. What does this company do? Fall into the utilities, power producer, infrastructure, electricity capacity, blah, blah. All right. Likely fueling the AI. Probably the story behind it. On a weekly, big run up, big base, 37 weeks, 33% base depth. Really, really nice. Not too deep. Should got below the moving averages, rebounded. So a big spike in earnings last week. Came up right to those all-time highs. Hit. So for me, not only is it taking out these levels right here, these peaks, real rapidly last week, big volume, showing us there's a lot of buying coming into this stock. So really love that. Not sure if you're in this as a new position. Thoughts on as a new position this week? Oh, perfect. See, Andrew, you're reading my freaking mind, man. Thank you. Putting context to things. Okay, so as a new position this week, I don't like that. I don't like because I think, look, a breakout could work, but we're starting to get super extended. We're very, very extended. Like, look how high we are off just the 10. Like, we're 3 ATR essentially off the 10, 21, 4 ATR off the 50. A breakout's going to push that even further away. And we're also, the moving averages are right now lagging below the 200. So this has made a big move, but it's trying to catch up. And this is an early stage base, essentially, the way we're looking at it, right? What I would rather see is instead of looking at this as the big base, I would rather see us get some tight action and some sort of flagging, some sort of pullback, some sort of handle, some sort of cup, some sort of Darvis box type action, right below those all-time highs. Tight enough where I can assess my risk. And then this way, if we break out, I have a floor to aim at. Or if we go sideways enough that we could even buy against that support on the bottom. Or breaking even a downtrending line. Love this name. I'm actually going to put it on one of my watch lists because I think it's a watchable name. But don't like buying this week at the breakout. You 100% can. And I think if the market moves really strongly, you might have a case for that kind of base weekly position, true CANSLIM style weekly base type of breakout. But I think the higher probability is seeing us move sideways here, or if we do break out, squat back in and move tight and let the moving average, let the market catch up, let things kind of digest a little bit more. I know people are going to say, look, the relative strength, not the most strong, but we know this group, we know this industry, we know this is doing well, we know this is a younger name, and it's definitely got great fundamentals. So I think this is worth paying attention to, and all this buying power tells me it's worth paying attention to as well. So, yeah, love it. watching it. Personally, I would rather watch this breakout and go on without me. If it doesn't go sideways. And if it does break on and go out me, I don't think it'd be very long before we had some sort of a pullback and some sort of opportunity for this to digest this big move and give us another entry. Because that's the thing too. Just because you don't maybe make it here, right? SanDisk is a prime example. All right. SanDisk breaks out here. Big move. Move sideways. Digest. Big move. Move sideways, digest, big move. Like these stocks stair step, right? They don't just go to the moon and leave you at the bottom. So I would rather see this either A, break out, confirm it's, let me go back to the actual name. I'd rather see this break out, confirm the strength, confirm the uptrend, confirm the stage that we're in, not in that 2A, that we're actually in a strong stage 2 uptrend, see those moving average get all in the right order, see everything start trending upwards, and then get the next base, personally. Or if I was willing to take this, see it trade really tight at those all-time highs, get that multi-time frame kind of breakout stuff in a young name, and see it go from there. So I think that's a big piece of it, right? We can see something very strong. We can see something very powerful. Reddit reminds me of this last year, right? You're going to have times where there are people buying down in here. There's just there's other opportunities in names. You don't have to always buy other things. And look, this ended up being more sideways action. And at some point, if this goes on another uptrend, it'll base. But, I think a lot of people, right, with Reddit were like, oh, man, it broke out. And then what did it do? It squatted and it broke out. And then it gave us another rally and then it pulled back. And, to me, I'm looking for the easier, cleaner trends. And I'm willing to let something go without me because there's plenty of stuff out there to buy in the market. All right, we'll go to the Reddit stuff list. Finding Hope, A Lab. If you own this, beautiful. There's nothing wrong with this. It broke out. It did well. Look, this is an example of the opposite of what I said, right? This name broke out and kept going. But the difference is this was a little bit more clean of an uptrend. It shot off of this. It had a 2-day shoot off of that 10-day simple moving average and then kind of broke out. Not as extended. Still extended, but not as extended. So, and again, I'm fine with letting a name like A Lab just not give me an entry and go on and buy something else because I'm not trying to buy 30 names. I'm trying to stay most of the time within 5 to 8 names. If I can't find another name to buy or to get myself fully exposed, then the market isn't good. So, but no, if you own this, beautiful. If you don't, it's extended. Lamb Research, very much similar. If you own it, beautiful. If you don't, it's extended. And if you're looking to get in these, just wait for some sort of pullback, some sort of a consolidation. Use your strategy to get in there. But name's beautiful. UMAC. You know what's great is this is a name that a lot of people have talked about. It's in the drone space. I have a friend that owns this name that's been talking a lot about it. It's a name that's on my watch list. Its fundamentals are beautiful. We have insane sales growth. We're seeing the positive activity in the earnings. The annual, not so much, but the annual earnings, annual sales, great. We're seeing a ton of institutional sponsorship. We're in a group that was showing a lot of strength and now is kind of pulled back. But when we're looking at the weekly, we're in a young name. We've really we're clearly trending upwards, right? 250, 21, 10, 50, moving well. What I like about this is that we broke out through this this sideways big base, 3-year-long base, right? It's easier to see on the weekly. Broke out through this year-long base on a ton of volume, closed near those all-time highs. And it was super, super powerful. 90% move of that week. Now that's my pay attention here. It's not my, I missed it. It's my, okay, there's money poured into this. Everything looks good. Now I'm paying attention. Now I like what I'm looking. It is hugging that 21 EMA. It is doing something similar to what I saw with Rocket Lab and Eli Lilly and CrowdStrike. It is a higher ATR name. It is lower in its age. Drones haven't been showing a ton of strength, and that's why I'm not jumping at this name. But I think a lot of us are watching this, and I think some people may have the risk appetite for something like this and may have the portfolio space for something like this. My thing is, do you think drones are leading right now? Do you think drones is exactly where you want your money? And it's the best of the best material out there. But I do see for somebody a risk reward being pretty nice, right? Because if we're coming in here, and even if you're saying, you know what, maybe we go sideways, you're like, I just want to see us take out this Thursday high, right? So maybe you buy right here, and maybe you go to those lows. You got a 9% stop. Put a small position, you could probably help digest that, or maybe even you let it tighten up and flag even tighter, and you get an even tighter entry. So from a risk reward perspective, I like it a lot. I like the support resistance flip. So I could see a lot of ways that this is super appetizing to many people, but for me, it's just a name I'm watching. It's not something I'm looking to buy because I have other names that I feel more comfortable about. And I think that's one of the things you got to ask yourself, right? You can only buy so many names. Is this, and do I feel like I'm picking all the top guys? You got, I'm going to say, if you watched Mike Webster's interview with Mark Minervini is literally the king of analogies. He dropped so many good analogies, and I'm going to drop an analogy right now. And it's just funny because they just went on this whole rant about him and analogies, and it was great. I loved it. So you're building out your starting lineup for your baseball team, and you only got 9, maybe 10 spots, right? And you're looking at all the free agents that are out there. You're looking at everybody that's on your team, on the bench, on the farm leagues, in your double, triple, all these, like, right? You have all these people. Are you going to the AAA team and that one kid who had a really, really strong last 2 weeks that hit 2 grand slams the last 2 weeks and all of a sudden looks like he's getting really, really hot, and are you putting him in your starting lineup? No, not putting him in the starting lineup. You might call him up and you might have him start practicing with the team, and you might have him on the bench now, and you might have called him up to the big leagues, which is like putting him on your watch list. But you're not necessarily saying like you're batting number 3, man, because he had a good week and because he's showing a lot of strength. When you got a 4-year veteran that's super consistent and produces consistently, and you could rely on a little bit more. So though maybe the risk reward, right, hiring this guy with a low salary, putting him on the team is there, right, because he's got this big upside potential. But am I going to bench one of my veterans to do that? No. And that's what I think you got to think about. Like, are you willing to bench a high producing, strong veteran stock to buy something like UMAC right now? Me personally, no. And that's the way I look at it. Everybody's different though. All right. Reddit stuff. And again, if you guys got stuff while we're watching, please drop it in here. On to innovations. Extended. If you own it. So it's moving to all-time highs. It's got strong relative strength. Right? Nothing wrong with it. It's behaving beautifully. Oh, yeah, I'll definitely pull up Form. That's what I'm going to... Form and, I'm going to put on Comfort Systems, too. We'll look at both of those, because that just triggered my mind, the F. We'll look at both of those. So, yeah, if you own this, beautiful, right? Strong breakout of a traditional base, found support at the 50s, continuing higher. It is now... 5% extended from that traditional CANSLIM buy point, I think. So if you're in it, great. And it's behaving well. Don't see anything wrong with it. Going into the biotech space, another one broke out. If you're in it, great. Strong volume breakout. Looking at it on the weekly. This is a little bit of a concern. We're not fully out of this kind of range bound area on the weekly. But if you own it, I don't see anything wrong with it. Would I buy it here? No. ANET. Love this. Love this name. Kind of a base on base type of thing. Basing sideways, 25% base. Looking like it's still, like, it's not completely super strong uptrend, but I think this is a name that a lot of us are watching. And I love this pattern. And what I would love to see is some real true VCP action, right? Hit those all-time highs, pull back nice and tight, give me a nice, real good VCP, and this would be super appetizing. Strong watch list name. If you own it, great. Look at this, like kind of cup with handle, cup on cup, whatever the hell you want to call this pattern. Maybe a little easier to see on the weekly. Really, truly, like cup with handle breakout on high volume. I mean, beautiful, beautiful name. Beautiful breakout. Great. If you own it, beautiful. If you don't, it's extended. UBS came up, tightened up, pulled into those moving averages, broke out, showing it's in an uptrend. If you own it, great. If you don't, extend it. Seems to be the case with a lot of these names. Air, if you own it, great. If you don't, extend it. This name, I want to see this tighten up right around these all-time highs. APH, I want to see this tighten. And I already have this on my watch list. ANET and APH are the two names, if you could see, that this person brought up on Reddit. They're on my watch list because I'm watching them to hopefully tighten up near those all-time highs and give a good entry. The other names are gone and extended. So, ANET, APH, I like them. I want to see them tighten up near those all-time highs, and I want to see them then catapult from that tightness area, or at least maybe even a handle type action. The other names are all extended. Okay. All right. Let's go form, which is on my list as well. Fundamentals on this name are good. Good enough to put on my list. We're basing 38 days, 29%. It has been a big run up, and we're getting a nice pattern right here. If we're looking at this on the weekly, super powerful move. And now giving that basing action. And this is where we talk about, and I say this a lot, right? When this name is going on and everybody's like, why did I not buy this? It was on my watch list. I wish I owned this. Like, don't lose track of it. Put it on a watch list. Remember, because at some point, if it's going to be a big leader, just like Sandus did, it's going to base, it's going to give another entry, it's going to give another opportunity, it's going to stair step and then catapult higher, stair step and catapult higher. And there'll be multiple opportunities to get in on that name, which is also why I like selling into strength, because if I sell into strength, and this is a real big home run name winner, like Sandus, like MU, they're going to likely pull back and give an alternative entry to add back that stuff that I took stock off. And it allows me to emotionally handle those pullbacks, and doesn't necessarily mean I'm trying to sell at the top and then re-enter at a lower price. No, it's as simple as I'm taking profits on the way up because I don't know how brutal when the train's going to stop. And if it does present the chance to add it back and it continues to prove itself and show its strong leader, I will be willing to put more risk back into that name. A lot of these names, I'm just watching. If you're a traditional CANSLIM trader and you want to just buy it at the breakout to all-time highs, I don't think it's entirely wrong in this market now that if we start to move sideways and things kind of like tighten up and then break higher, like I'd be a little more apt to buy some breakouts if the market tightens up and then gets a really strong move to all-time highs. On that big gap up day, I'd probably be a little more willing to buy some breakouts. But ideally, I just like the tighter entries. It's something I've gotten a little more comfortable with. So love it powered through the 50. Yeah, right. So it was kind of the 50 kind of meant nothing for a little bit, right? Broke through, got above, broke through, and then it kind of started seeing resistance at that 50. And then all of a sudden, and after the resistance, 1, 2, 3, 4, like right, boom, shot through. And now we're starting to see hopefully a 10 to 21 cross, the moving average start to stack normally, and this thing is just kind of moving sideways. And again, ideally, I would like to see this tighten up right around here. And then sometimes you don't even have to wait till the all-time highs. You can maybe draw a trend line or just get another area. And so this is super, super something. Something is very high on my watch list. Not what I wanted. Nope, not what I wanted. What I wanted. Very similar with fix. And this is what we're seeing, right? We're seeing a lot of this. A lot of this. A lot of names that have gone on, names that are now moving sideways, and they're in basing patterns. This watch list needs to be cleaned up. I didn't, but I'm just going to flip through this already. Why is this on here? Some of these names need to get pulled off. Corning. Reset this real quick. Right? Basing. Extended. Right at all-time highs. Right at all-time. Like we're starting to see some more of this sideways basing type of action on some of these names as we start to flip through. Teradyne, another name that looks beautiful. Max Linear. Like there's just a lot of this, a lot more basing happening. Very similar to the market. The market's moving sideways. The market's basing. Like, are we going to see these names break out? Or are we going to see these names roll over? And this is kind of just a quick flip through. And again, this list is sloppy. I have cleaned it up. I have to, after I get off this, I got to clean this up a little bit. But then again, I don't really see right now. I'm pretty comfortable with the names I own. A couple of the names I'm watching, but this have to be tightened up. But again, just flipping through, right, you can see these names, like a lot of them basing or a lot of them finding some support, like even a Twilio finding support at the 50, looks like. So from a bottom-up perspective too, the market looks like it's coiling and wants to get ready to break out and make some moves. So Fixer reminds me of the CLS chart. Powerful uptrends for years, now basing like you were saying. Yeah. And that's how these stocks act. And the longer they base, as the saying goes, the higher in space. Something along those lines. Deeper the base, higher in space. The longer the base, higher in space. Base a lot, go up a lot. Something like that. But with that being said, especially on those big, long, deep bases, you still don't want to just buy as it shoots through. Like I like to have some sort of a realistic entry, because if it does base for a very, let's just say, not saying on this chart, but let's say you have a big multi-year base, it's not likely not going to bottom and just shoot through the top. It's likely going to stair step inside of that base and give entries. No days off, I see. Happy Father's Day, Poppy. Yeah. Literally no days off. Ever. Between the market, between my job, between working on the house, no days off. Maybe in the future. That's why I'm doing all this hard work. Give myself a better future. Give my son a better future. Give my wife a better future. So yeah, no days off. But appreciate you acknowledging that. All right. What else we got? Anything else? Anything else? What we got, guys? Any other stocks? Trying to think. Yes. Oh yeah. Honestly, I could do this. I could do this all day. I could sit here. You got. So I used to. While you guys are thinking, you want to throw some stuff out there. So I'll tell you guys a little bit of a just kind of background. My mentor and me, we used to meet every Wednesday, and basically he kind of said, all right, we'll meet up every Wednesday, Texas Roadhouse, and we will talk stocks. I will help teach you. Gave me how to make money in stocks and taught me very, very strict CANSLIM rules. And every single week it originally started like, hey, I'm going to teach you about the market. And then eventually started progressing into similar to this. Very, very disorganized, but a similar, like, let's review the stocks and what's going on this week. COVID hits, right? Everything shut down. We decided to take it to Zoom because we want to keep doing being consistent. We're like, well, now we can invite other people, friends that have said they wanted to trade. We can let them kind of join. And it was a disaster because imagine this chat room filled with people that don't know anything and just throwing out like, well, what do you think about, and then like naming some penny stock, or what do you think about, and naming stuff that has nothing to do with what we all do, similar styles. And we decided, all right, nobody is now allowed in the meeting but us, but we'll send them the recording. And then I said, well, if we're going to record it, let's put it on YouTube. It's easy to share. If we're going to put it on YouTube, why not make a YouTube? And it led to doing this weekly. Very, very rudimentary Zoom meeting recorded, and then shared out with people. And then that led me to kind of doing a YouTube channel. That YouTube channel started to grow. And to make a very long story short, me and my mentor had a falling out because to keep it simple, I was doing all the work. I was the one that was doing all the editing. I was doing all the prep. I was doing everything. He was appearing as if pretty much a guest and then moving on. And it was just taking so much work. And we were starting to grow. It was getting pretty close to monetizing, which was pretty wild. And I was like, if money starts getting involved, and God forbid we do blow up and this gets big and I'm still doing all the work and we're splitting the money, I'm going to be really frustrated. And then at the same point, I was buying a house. I had just got married. I had a lot of stuff going on at work, and it was just becoming like, it wasn't like this where like I decided I'm doing it on a Sunday night by myself. It was what works for both of us. And it was just becoming too cumbersome, and I was doing everything myself, and I got frustrated and it fell apart. And at the same time it fell apart, a lot of stuff going on in my life. I started this channel. I did a couple months of videos and stuff very similar to this. And then work got crazy and I had to really focus on my training at work. And I took about a 2-year hiatus, and then work finished, bought a house, had a kid. Everything kind of finally settled down after we actually bought and sold the house. And last year I decided to come back and start doing this. And I used to just record these. Yeah, let's go through this. I'll finish the story. So I used to just record these, but that required a lot of editing. It was me by myself. There was no interaction. There was no answering questions. There was no bringing up stocks. It was just very like, I came up with all my material. I spewed it all out to everybody and people watched it. So I originally wanted to live stream because I thought it would be fun, and it would also take away my editing because I learned how to kind of set things up where I could do all this kind of stuff and make where I don't have to edit. So then when I realized I could do this live and you guys can interact with it, I realized it made it much more fun. And now it saves me a ton of time, and we all get to interact together and answer questions. And yeah, it's fun. So that's what's led me to doing this live. And I really appreciate everybody that's in here because as Andrew, as you said, this stuff is really fun and I do enjoy this. So as much as it is a requirement for me to trade, as much as it is to help you guys and is also my personal journal, it is also fun, a lot of fun. All right, back to business. I actually just put this on my watch list today. I remember putting this here and I remember seeing this. This looks really, really great. Healthcare, definitely not the strongest, but seeing some strength. Sales are good, like fundamentally wise. I don't think this is a great fundamental name, but this is a big player within healthcare, right? We all know this name if you're been trading for a while. I love this breakout, tight Darvis box type stuff, tightening up against the moving averages. Again, being selective. Do you think this is the best name? But at the same time, if you find that you're too heavily in like semiconductors, maybe this is a name that you can get in that diversifies you a little bit. So I think this is definitely, if you're looking in the healthcare biotech area, this is, along with Eli Lilly, one of those names that I really, really like because it's a leader. The chart is beautiful. Yeah, I like it 100%. Anytime, Carl. Anytime, Carl. Thank you guys. Like I said, this is fun because you guys make it fun. I could be sitting here by myself with nobody watching and just talking to myself, and it would suck. And you like, right? I love stuff like this, right? And this is a prime example this NBIL, the 2x leverage stuff. I've never really thought to trade this way. And I've never really personally bought something like this, minus maybe like the triple Qs or the, like SQQs, TTQQs, trade stuff like that. But like having somebody do this and ask me about it forces me to think about the situation and forces me to put into context. All right, like I'm thinking a lot with you guys, and it's helping me to like refine my thought process. And it's helping me to think deeper about things and why I agree, disagree, and things like that. So, you know, questions like that, bringing up stocks, like a lot of the stuff we talked about today, it's forcing me to think about things that maybe I wouldn't have otherwise thought about myself, which just gets you better as a trader, right? Potential high filer drug discovery in pancreatic cancer area, if I recall. You know what we could do? Let's see. Let's use the power of Deepvue. Let's see what this says, and then we'll elaborate from there. This is actually a really cool feature. So you can click this, and you can see. Gives you a little AI breakdown. Well, cancer oncology. Let's see if it'll see. They're still working on this, but let's just see. All right. There you go. Pancreatic cancers in there. So a lot of different cancers. Yeah, like there's just so many things. Look, you guys just saw, right? I have my own dashboard, right? Like I put a lot of hard work into this. Track my distribution days. I got like, you know what? Here, I'll show you guys some cool stuff. Like this is like the Webby trend laid out, my 50-day trend laid out. Like I put a lot of stuff into this, the sectors, the industry groups. You guys see all the stuff that's in there, right? That's very different than getting all this fundamental data, all the screening, all this research. Like I couldn't make something like this if I wanted to. That's going to perform as well as this. And the big thing to me is the customization. They're basically giving me, if I was to make something myself, the ability to like just take a built platform and customize it to do what I want to do with all these little features. Like my data panel's all custom. It's everything I want. And they're making more and more improvements, right? They're tweaking a lot more stuff too to make this even better. So yeah, I love it. Love it. And this is probably one of my favorite things where I just click and I'll just, what does this company do? And I just stop myself from having to YouTube and having to Google something by just being able to go click. Oh, okay, that's what it does. And then you can even say like, watch this. Do stuff like this. You're going to be able to build screeners this way. You're going to be able to build watches this way. Now it just gives me, right? See if it, and I'm kind of experimenting because some of this stuff I don't use as much. Wow, look at that. Ooh, look at that. Cool. All right. See, this just helps. It really does help. And it breaks things down. It just makes life easier. It's like having your own little personal assistant. And this is like early, early stages. Early stages of this stuff. Like, watch, I can even click this. What happened on May 12th? Like right clicked, and then I hit, watch this, right click, ask Deepvue. And approve new blood test. Right? Boom, just off of that. Right? How cool is that? So you get a big update. You just boop, right click. Right. I could probably do the same here. Let's see if this is the opposite. All right, stuff in there. And sometimes partnerships doesn't work out. Being on your own is better and let you do your own thing on your own schedule. Keep up the excellent work with the Discord and YouTube channel. Yeah, I mean, look, the partnership with Deepvue. Oh, shoot. Boop. I am on the wrong screen. My bad. Here's all the stuff I was doing. I'll scroll through that while I talk with some GH stuff. But and when I was saying right click, I hit right click, ask Deepvue, and that's what gave me the date information. So as I talk, I'll scroll so people could also read this stuff. But what's crazy about this partnership thing was if anybody has been following me for years, I was big into the MarketSmith tool. Loved it. Used it for a long time. Coming from CANSLIM Trade, I used all their tools. But then when they sold, things just weren't innovating. They were just lagging behind. It was such an outdated tool. The price was just ridiculous. And I became so married to their platform, I felt I almost couldn't trade without them. And I was like, that's scary. I can't do that. I have to get comfortable with my own ability that I could trade on any platform, which I finally got to. I built my own screeners. I could use any platform. As long as I can get the information I need, I could use any platform. A guy, Michael Lamoth, if you guys don't know him, he actually lives 20 minutes from me. He had a webinar. I was watching it. He brought Deepvue up. I shot a message after. I was like, what was that platform you're using? Because it looked amazing. Like it looked like the best cancel platform outside IBD. He's like, oh, it's platform Deepvue. Check it out. And then I look at it and I'm like, wait, Richard Moglen's involved with this? Like, a big fan of him. Watch all his stuff. Let me try it. So I tried it. Gave it like a month where I used both IBD and them because I was nervous to switch. And I was like, wow, I'm actually getting better, faster results with Deepvue. So I switched. And I was so happy because I had gone for about 3 years of trying to get off of IBD like a crackhead. And like a crackhead, I would go clean from IBD for a couple of weeks and then use again and go back, and I couldn't kick it. I just couldn't kick it. And I tried TradingView, I tried FinViz, I tried Thinkorswim, I tried everything, and I just wasn't happy enough. And I kept going back, and I kept paying more. And I was just frustrated. And then I found Deepvue, and it was like blown away. And then I was like, this is the tool. I can actually don't want to ever go back to IBD right now because it's just I was ranting about it on Reddit and Twitter. And Nick Schmidt, who used to be one of the founders, if you don't know him, shoots me a message. And he's like, hey, love all the stuff you're saying about the product. Glad you love it. And I just basically told him the whole story that I just told you guys. And he's like, dude, that's awesome. Love to hear it. He's like, hey, if you want, I can give you like a kind of a link or a code or something. He's like, I could talk to the guys and see if we can kind of get something like that. We're thinking about building out like a partnership platform. So I was like, yeah. I mean, I'm already talking about you guys. I already love the product. Like, sure, why not? We were talking through Twitter, and he's like, hey, do me a favor, shoot me a text. I'm horrible with this Twitter stuff, but definitely want to connect. Sends me his number. It's the same area code as me. I go, yo, where do you live? Because that's the same area code as me. He says the town. I'm like, dude, you live 10 minutes from me. I had never interacted with Nick before this, even though he's pretty big on X. Like, I didn't even know who he was. I'm like, you literally live like 10 minutes from my house. And he's like, dude, no way. We start talking. I just start communicating with him about Deepvue, and through back and forth, got to meet all the other guys, got to do some stuff, got to do onboarding calls with them. I do some other stuff with them now. And it's been great. So it was one of those where, hey, you like a product, you're using it, talk about it, maybe get a chance to connect with the people that are producing the product and get to work with them. And that's kind of what's got me here. A little bit of story time too. It's late Sunday night story time with Bobby. But yeah, and for the Discord and the YouTube channel, Discord was something I started because I just had found out about it through gaming and saw that it was being used in communities like this, and thought it was a really, really nice, closer knit, less noisy platform. That grew rapidly last year. I have no plans to ever make it a paid server because I think it's so great because it's not a paid server and because everybody's such a good community. It's such a good community. And the same thing with YouTube. Like I plan on, I want to continue to do this stuff for free. My goal is to make money as a trader, and to be ultra successful as a trader. Not to make money as a influencer or to make money selling stuff to you guys or courses or things like that. The Deepvue thing just works for me. Like I get a little bit of kickback because it's something I use all the time and it gets you guys a discount. But yeah, in terms of all this stuff, it's also partly like a journal for me. It's a chance for me to document this stuff. Like I can go right now at any point from now in the last 60 weeks, and I could watch myself talk about what I feel in the market and how I thought I should trade and see how that kind of matches up with what I actually did. So, and it's kind of, I thought about this too, because Mike Webster talks about how he does the YouTube channel and it's for his like kind of family. And now that I have a son, I'm like, this is kind of cool because if I continue to do this for years to come, my son will be able to go back and for years, if he decides to get into trading, have my voice talking about the market in detail, stocks, everything. Like he's thousands of hours of me talking about the market, which is kind of cool too. So benefit there as well. Yeah, when he said that, it was just like, I was like, dude, that's awesome. And actually, and I doubt he's watching because I think he's in California right now. My one friend is starting to get. He's a big poker player, and when you know how to play poker, there's so many similarities to trading. Like it's ridiculous. He has like his risk management and his emotions and mindset kind of side of things is so well suited for trading. And I gave him Pete Robbins's book. He read it. He's interested in trading, and I'm thinking if he's open to it because he's coming from scratch with no trading experience, of doing some sort of a video of me helping him learn how to trade. If he doesn't want his face out there, then I'm debating, will he let me record it and have him just be a voice behind the scenes, no voice, no face, anything, and document his kind of journey of learning and think about it almost like a official tutorial trading course where I'm going to really think about like, all right, if I'm teaching somebody to trade, what books would I have them read? What topics do I want to cover? And build a really, really structured, like first year introduction to trading, not even introduction, first year tutorial to how to trade, CANSLIM and similar strategies to give him his foundation. And then obviously he'll break out and do his own thing. And if he would let me do that, I think that'd be sick. Because if I do that and I structure all of that and then I actually record all of it and record all of our conversations, that kind of is something that everybody else can use as well. It'll definitely help me become a way better trader because I'm going to have to really step-by-step think through things. And like, I'm sure he'll ask me a ton of great questions that will get me to improve my thought process and really hone in on my skills. And it'll also, I think, document something that would be really, really cool. Like the old 60-minute interviews with people who don't want their identities revealed, blacklight which yeah, that would be pretty cool. I don't know if that necessarily he doesn't want to. I'm just putting it out there that if he didn't want to. But yeah, I think that would be just awesome for me, awesome for him, awesome for you guys, and awesome, especially for the future, because I would actually approach it more as like, I'm teaching him. And if my son is to watch this, let's just say my son gets to a certain age and I'm no longer around and he finally decides, I kind of want to get into trading. Just like Webby said, he could pull this stuff up and go, all right, I got 60, 100 videos of a step-by-step, week-by-week trading course from my dad, teaching me what he thinks and how to trade and giving me all the materials and telling me what books and things to read and putting me on the right path to get me a start as a foundation on top of all this other stuff. So, and again, all stuff, as you guys know, I'm a huge fan of Webby because let's just face it, the guy is one of the probably kindest. I don't know him personally, I've only known him from social media and from watching him and interacting with him. But you could just tell he's just one of the most genuine, good people out there, on top of being a great trader. So when he does things and he says things, I pay attention very closely. Even something like this. So it's also kind of sparked my interest of that. That'd be cool. I'm still really new, so there are many topics I'm still weak on. Yeah, and look, here's one of the things too that's interesting, and we'll kind of wrap this up. In the beginning, things are very overwhelming, and I was talking to a friend that I have. He's older. Ironically, he's a friend of a friend. Me and him have talked a lot, but I've never sat down with him in person. But he trades. He started off very similar to Minervini. Now he trades very similar to Matt Petrilia, but very similar to all of us. And I was saying how, earlier in your very beginning years, you'll want to learn everything. You're like, I need Minervinis, I need Qualamagi, I need Oliver Kell, I need to read this, I need to read that. And you need to read like Dan Zanger, this, that, and you're just trying to absorb everything. And it gets very overwhelming because some of the stuff contradicts each other. Some of the stuff agrees. Do I go short term? Do I go long term? Do I want tight stops? Do I want long stops? Do I want to just set an arbitrary 7% stop? Do I want a technical stop that makes sense? Do I pay attention to fundamentals? Do I not pay attention to fundamentals? Right? You could drive yourself nuts. But after you kind of digest a lot of that, I think what ends up happening is you see the common denominators across everything. And then you see what makes more sense for you as you've gained experience. Like at this point now, this summer, actually probably within the next couple of weeks, let me see, 2017. Wow. I'll be 9 years of trading coming up in a couple of weeks, with some small, like a couple year hiatus and another couple, almost a year break. So not a full 9 years of trading. But I think about it, and there's so much that you learn from trading where I've seen, like, I tend to handle this well. I don't like this. I like to overtrade, so maybe I need to be a little more active. I can't hold for big losses, so maybe I don't want to be holding to a 10-week moving average. Like, you start to learn a bit about yourself, and if as long as you keep pushing, keep staying on task, and keep trying to micro improvements over the time, you kind of refine things. So again, circling all the way back around, to give my son and my friend a good foundation, I think, of what the core principles are that fall to all those strategies. And then I believe really following CANSLIM strictly for at least a year, at least a couple markets, to get a good grasp of just a big overview. I think it gives you all the tools you need to then branch out to these smaller things. Because if you look at these guys, Oliver Kell, Qualamagi, my buddy Shake, Minervini, I mean, all of them found a big piece of their strategy rooted in CANSLIM. So getting that rooting there and then seeing how you kind of build your own flavor. Because even for myself, I've started to see that, like, there are a lot of traders I'm similar to, but there are a lot of things that are just slightly different. We follow similar principles, but there are probably things that I do that are going to be different. So to give that kind of base structure to my friend so he can find his own way and put him in the right direction, and record that for if my son decides to go down that path, or anybody else for that sake. Not to speak for him, but I think Webby had a health scare or wake up kind of thing that would change your perspective for the good. Yeah, I mean, from what I understand, he was always the guy he is, right? Like, he always seemed like I know he's a hippie at heart, right? So I think he always had that good kind-heartedness. But I think it put into perspective just kind of the bigger picture of life. Obviously, he takes his health a lot more serious now and taking care of himself and his body, and stress and things like that. But from a personality perspective, from what I understand, he was always a good, kind-hearted person that wanted to do the right thing. Last one, I promise. Dude, we're here. I'm just talking. VT, this is on my watch list. Great fundamentals. Chart looks to be breaking out to all-time high volume. Yeah, great fundamentals. Let's flip back over. Institutional sponsorship, strong annual, strong sales, good annual, decent sale, like good annual, good sales. Electrical components, which we saw was in my top 20. No, not a good ROE, lower ATR though, which is healthy. This is nothing I would like as good. And yeah, like you said, look, on a weekly run up, clear relative strength. Not a double bottom because it didn't undercut this, but holding above the 50, chopping through these averages, moving sideways, and looking like it's breaking out to all-time highs. Very actionable right now. For the traditional CANSLIM trader, I'd say this is within a buy range. Even within a buy range now, like I would probably look to maybe even the 21, somewhere in this region, like the stop at the 21, I think is pretty good. So even if we get a few percentage up there, you can have a 6-7% stop loss, it seems, around there. So yeah, very actionable. I do like this name. And you can see the blue, it's on somewhere on this list. All right. Well, we had a lot. We had story time, we had stocks, we had the overall market analysis. We did a little bit of everything today. But you guys kind of kept us going with this chat. So I appreciate it. This is definitely, I think, the most views I tend to get on a live stream. All right, so let's wrap this up. First off, you guys made this fun. I appreciate everybody. Went through a lot of names. Just looking at the overall market, things look really, really good. They look like they're coiled up. They look like they want to break. Exposure, I think most of us are kind of sitting with some good exposure with some tight stops, just like sitting there like, all right, can we make this move? I'm ready. But obviously we got to plan for all directions. So make sure you have those stops. Make sure you know what you're looking at on the upside, downside. Make sure you're being selective. Make sure you're looking at the leadership. Make sure you're not forgetting about maybe big names that you missed prior that have now formed bases, because there's a lot of setups and a lot of bases out there. Just make sure you're following your strategy. One of these things on the weekend that I think is really important is doing a lot of this work now. When the market's closed, the emotions are low, and you can think about it clearly, peacefully, calmly, without ticks driving you nuts. Up, down, up, down, up, down. Build that plan, prepare for the week, and get ready and be ready to execute it, and keep emotions as far out of it as possible from your actions. I think it's, again, 60 to 80%, I think, is really healthy on this market. Again, I'm a little higher. I got 3 names, half my portfolio that's got doing really well and got a cushion. The other half that's got some pretty tight stops. So that's why I'm kind of a little higher on the exposure levels, because of those tighter stops and because of those entries. And again, because I'm buying some of those pullback support entries doesn't necessarily mean that's your approach. Everybody's going to have their different flavor on how they handle what is really a growth stock trend following system, is what most of us are doing, from a swing to a position trade kind of setup. That's the majority of what I think most of you guys are doing. So I share my thoughts. I try to keep some of my comments general to, I think, apply to, more people than not, and not be like, I would never take this trade, and say, like, I don't use this, but here's what I like about it, right? Here's what I think is good. Here's different entries I could see people using. It's just not what I do. So hopefully you guys see value in that. I try to keep it, again, as helpful to more people as possible. So yeah, thank you for taking time. Anytime, Carl. Anytime, Lorphus, Andrew. Let's make some money. Good week. Oh, thanks for putting it all together. Yeah, anytime. Again, I get you guys. I do this every week, so I appreciate it. But there you guys go. Look, there's the YouTube link. There's the X. There's the link in the description for Discord. And as you guys know, throughout the week, I'll do my my daily write-up articles, doing something very, very similar. Kind of try to organize that. It's another level of my own journaling that I put out for free for everybody as well. You guys know where to reach me if you got any questions, comments, want to share thoughts. Yeah. Other than that, can't thank you guys enough. Happy Father's Day to everybody out there. All those fathers trading out there. I could tell you one thing as a new dad within the last less than 2 years, it definitely changed your perspective. Definitely changes your mindset and gives you something more that really, really makes you really want to do well in the markets and in life. So can't thank you guys enough. You guys make this what it is on all areas here, Discord, X, everything. And like I said, I just really can't thank everybody enough. You guys are awesome. So enjoy the very little bit of the weekend that's left. And I will see everybody in the morning at the opening bell. Happy trading. And as always,